the title of this is Rethinking Broker to Carrier Data Exchange. So for those of you who came last time, we spent a lot of our time in June talking about how to make the data that was coming from the inception of a risk, the earliest stage of a risk, through the broker to the carrier, fundamentally more efficient and smart. And we've had it back today talking about the same kind of things. We're talking about PDFs and talking about... This is particularly what we're going to talk about today. It's consuming a lot of time and a lot of money. And the right place to start, Sam, was with you, the broker. No, I won't be pejorative. What is the broker sending to the risk carrier today? What's in the exchange? And God, yeah, just that, how far have we got in the evolutionary chain?
I'll keep them honest.
Yeah, do that.
So I work for Aon, which is obviously a broker, but I'm not a broker myself. However, at the very start of my career, I started work in a broker's, and I did it for a few months. And as luck has it, it hasn't changed so much since, from to today, that my first-hand experience is not still relevant, which is absolutely fantastic. So I can draw on my own personal experience to answer this question. If I was to summarize it, I'd say it's time-consuming, tedious, and mildly terrifying that people have to do the steps that they do. But what happens is, the client will send through, their risk manager will send through the exposure data and experience data to the broker, which then gets checked. It's probably been checked by the risk manager, and then it gets checked by the broker. And then there's some manual copying and processing and analysing it. And then that goes into maybe one or maybe multiple formats for the market, which are then checked and then sent to the market, obviously by email, because that's the best way to send anything. And then the markets will then review this, and they'll do some checking, and they'll do some manual processing of that. And you can see the enormous costs that we get through this multiple layers of checking and duplication of effort that really are, as I think we all agree, are ready for even further improving than they've managed in the last 20 years since I started work.
I was going to ask how long ago that all was, but so how long? So what should be done? I mean, everyone's talking about it. We're talking about the technology how far have we got? And is the culture right to do what we should have been doing 20 years ago?
Absolutely. I mean, the culture is there, and what heartens me is that there are so many companies involved with making it better. This is not just there's one company trying to do this. Actually, the brokers want to do it, and the carriers themselves want to do this. And we have the technology to be able to do it. And the benefits are just so big if we think through, from a perspective of broker effectiveness and underwriter effectiveness, they can do so much more. They can do the jobs that they're actually being paid for rather than the job that they is a sort of ancillary that they have to do. And yeah, I'm very optimistic that we've already seen progress in this area, and we have small examples certainly where we get broker data being ingested and used and directly consumed by underwriters in a straight-through processing way, and we will just continue to see that and extending across more classes and geographies.
Amy, I'm going to come to you because you have an underwriting role, head of underwriting ops at Zurich. The way your underwriters do their job is right now, and how they spend their day is a function of the data and the quality of the data that we're talking about. It's almost sort of defined by it. What compromises does that force your underwriters to make? Why are they? How much better could they be if they actually got good data?
Yeah, I mean, what we would love for our underwriters to be doing is out in the market, meeting with their brokers, understanding primarily their customers. To us, the better we understand our customers, the better we're able to position our risk. Feedback is you're spending half the time sort of being a data gatherer, which is really not where we want our underwriters to be. And I'll also say, I mean, we do data extraction, so it's not that we don't have, which I think is honestly going to be commoditized pretty soon, but we do have mechanisms so that we're not sort of pulling information manually, but by the same token, it's, to your point, the checking of the information. But we need our underwriters to be out in the market. You know, the title is market-facing underwriter, not desk underwriter, and that's really what the role is intended to be, not somebody who's sitting there, you know, sort of culling through data to ensure that they understand the risk. So, you know, and as we think about even the role of the UA in particular, in terms of like data extraction, I mean, we expect to see all of that evolve and really enable our underwriters to do sort of the risk understanding and the underwriting portion, and also be out in the market understanding customers, building relationships with brokers, which is super important for us. We also get feedback, and I think, you know, to some degree of, you know, every insurance company has an appetite, and it's, you know, based on SIC code, and how we understand the risk and how we do risk selection is really tied to that. But brokers will say, you know, of course, every insurance company, they want all the green risks, they want all the really good ones, but where you can really shine is in the risks that are not so green, and how you come up with creatively a deal that works for both the customer and Zurich, and that requires time, right? And if you don't have the time to really spend understanding the customer and crafting that deal that works for both sides, you're often declining risks just because you don't see a path forward.
Tom, you talked about this earlier. You know, as a data services provider, you're going to say, I've got the tech to sort all this out, and I think that tech was pretty good anyway, but now we've got Gen AI that's going to be a substantial you know, leap forward in terms of being able to get what you call decision-ready data. What are you going to do, and what are you going to be able to provide that is going to make Amy's colleagues' lives fundamentally easier? I mean, I'm now talking not sort of almost like generically, but what can we get onto the desktop that's going to change things?
Yeah, I think Amy and Sam's both all kind of talk in both directions. So I think what the carriers would really love is that all the data they need to make their pricing and risk decisions shows up as part of the submission, which doesn't happen today. Parts of it show up, parts of it have to be sort of extracted or derived. Because at the end of the day, the underwriters, their skill and their experience is in pricing risk, right? It's not figuring out what's on this PDF. So we've talked about that quite a bit, that, you know, ideally brokers who can bring carriers that data in a ready-made format means the carriers can in turn quote faster, more accurately, et cetera. So that in that direction, I think there's real opportunity there. But if you think about it in the other direction, what comes back from the carriers, the quotes, the policies, those are all snowflakes as well, especially in commercial lines. So now, you know, the Aons of the world serve as the role of a sense maker. So can you help the customer, the insured, make sense of these quotes they're getting, compare them, because they're not easy to compare just out of the box, right? They're in their own formats. The policies are complicated. The historical policies, you know, are also a lot of those to think about. They exist in documents in some kind of document store. So the pockets of information that could be derived if that was data instead, that's a big opportunity, I think, in both directions, going from broker to carrier, carrier back to broker, all the way back to insured.
And you made this point earlier. I mean, it's one thing to do that. That's a big help, but you also need that sort of traceability, auditability that you were talking about before. I mean, what is it that they get that will enable them to? There's going to be a lot of data that's going to, you're going to get quite close to a lot of data coming down to a technical price.
I mean, think about what goes on, right? The carriers and the brokers play rounds over and over again, right, across customers. So the carriers are gaining intelligence because they see all these different ways risks are presented to them, and if they're better at understanding that, they can price it more effectively. The brokers, on the other hand, see the opposite. They see all of these quotes coming back, and the carrier saying, I don't like that risk, here's why. The brokers can, in turn, add value to the insured by saying, hey, if you do these things, you're more likely to get covered. You're more likely to get a better price. So, that's sort of this sense-making in both directions, but it requires, if you kind of go back to the decision supply chain, what are those piece parts that go into those decisions? For the carrier, it's, should I write this risk and at what price? And for the insured, how can I better present myself to the carriers to get covered? And the brokers play a valuable role because they play these hands over and over again across all the carriers. So they have a very interesting perspective on the state of the market in terms of writing risk.
Sam, is that how you see it? Are you preparing yourself for this future? I'm thinking about this world and how data exchange evolves. How does that change the nature of the duties and the role that a broker performs?
Well, it heartened me to hear Amy describe what I've also experienced, which is markets will decline risks if they don't have the time to be able to quote. So actually, if we think about automation and straight-through processing, what that enables is the increase of underwriter capacity. What that means is, as a broker, if where we're offering up risk data to the markets to be able to process it more quickly, it means for our clients they get quotes sooner. It means for markets we've increased their underwriting capacity. What that means back for the clients is we've got greater choice, we've got greater, we're leveraging a greater pool of capital, so there's value for the customers. So, and that, you put all those bits together, and that is a great broking service. That is a transformed and enhanced broking service to provide.
Amy, are you going to trust all this data? I mean, I don't mean that in the sense of you wouldn't trust it if it came from. Ultimately, people are going to get you much better data. It's going to be decision-ready data. But will you believe it as just decision-ready data? What do you feel you can? Where does the boundary lie between what you'll feel you need to do yourself and what you'll accept other third parties doing?
Yeah, I mean, there's kind of a multifaceted aspect to that, I would say, because we currently have, initiatives underway with about 5 or 6 of our largest trading partners, where there is a degree of data coming to us through API directly. It's not as much as I would like, and we've been at it for a little over a year. And I would say from that aspect, there is, so long as it's accurate, right? And so long as there's not, adoption is not a small thing. And I always say, if I could build a model to forecast or predict adoption, I might, be making a lot of money. So if anybody has thoughts about that, go for it. But I think direct exchange of data is probably more accepted so long as it's accurate, and I think we have a much better, chance of being accurate from that perspective. But when it comes to sort of the summarization of information, I would say, jury's still out a little bit in terms of, because we're not far enough along in the journey to understand adoption of that type of information. And even though you can potentially summarize information, is that value add to an underwriter? Are they still going to go back? And we talk a lot about traceability as well, but if I'm spending the same amount of time clicking on the button that traces me back to where the information came from, the amount of time that it saves starts to get smaller. And if you think about, years before I even started in the industry, where people manually calculated their premium, and it took a while for them to trust, when we built systems that automatically did that the numbers were accurate. And I would argue there's still a lot of debate of, and questioning of numbers and new models, but, I think it really just depends. I also know that, on the carrier side, we are, I think, broadly doing more data extraction than on the broker side. That's just my sort of speculation. And there is even, you talk to multiple vendors just doing data extraction, there's like an industry-wide like 80% accuracy rate. So there's still some level of, no matter who's doing the data extraction, the quality of the checking of that information is really gonna inform, how much people trust that information ultimately.
I think trust is going to be a huge part of it. When you say direct, you don't want to disintermediate Aon, presumably.
Well, I mean, there's players out there right now that we've spoken to, done, kind of pilots with that are, unfortunately for me in the middle market space, there's players that are looking to be more client facing. In other words, provide a service to a client to house their property data or house their fleet data and provide the telematics and all of that. But then, kind of the big question is, how do you sell that? Like, how do you make money off of that? Well, then you're either looking for the carrier to pay for that or the broker to pay for that. Then the challenge that I'm faced with on the, kind of underwriting operations side is, what's my margin? If I'm trying to drive efficiency, through headcount and really kind of, drive a more efficient operation, but I'm paying the same amount of money that I would pay for the headcount, then it doesn't get me any farther along.
So in less than 1 minute each, the same question. If we carry on getting better and better at the data, and Amy's made the point, if only you could model adoption. Tom, to you first. How far will we be in 5 years' time? Not how far do you wish you'd be? How far do you realistically think we would have got?
In 5 years, I think quite far. I think that's an achievable horizon for sure, especially with the introduction of Gen AI. Now, there's all the stuff to make Gen AI successful is around this traceability and explainability and trustworthiness. That's where you're going to see most of the investment, because the reality is the super large language models, you're not going to see too many more of those. They're kind of, that play has been made. So now it's about how can you use them successfully. But I think in 5 years, that's a reasonable time frame.
Talking to somebody who started out doing this 25 years ago and who thought that we might have got a little further than we have. Sam, come on, give me your view. Again, not what you wish for, but realistically, what do you think you'll be sending to Amy in 5 years' time, and how will it have changed? How will it change what you do?
I mean, for Amy, it'll be anything she wants. Obviously, we're favorite client here. So we. Joking aside, I can't see how we would not make available our risk and exposure data to clients as an API, as a service that they can extract, and so I think it'll be made available. I can see how there'll be parts of the industry. So there are markets where pricing for profitability is not necessary. The world is a sort of a large place with hugely variable propensity to take up technology and in terms of what they're trying to achieve. So I don't think that will be the same all the world over. But in terms of mature markets with large established carriers, I'm convinced we will have broker data transferred through the automated means.
I think we're all hugely intrigued to see what happens when Aon's leverage, knowledge, tech, exposure, pricing are all combined into one offering. It's going to be very intriguing. Amy, 1 minute only. I'm going to give you a slightly different question, which is, what do you wish you would be getting in 5 years' time?
So I would have wished I was getting API data sitting here today. Like I said, we started a year ago. I thought, we'd be farther along. I think that exposure data has been a challenge. So I would say I don't necessarily, I'm sort of beholden to our trading partners and in terms of their technology strategy and their roadmap, which is a little bit hard to predict, but I would say we're only a year into it. So, maybe in 5 years, I'm hopeful that we will get to that point where we're doing data exchange. on the other side of the fence in terms of summarization and things a little bit more advanced than that, I would say maybe in a couple of years, we'll understand better adoption and how that plays out in the underwriting space. Because truthfully, I really, we're only at the very beginning of putting together and instituting and productionizing these use cases where we don't have enough data on what is well adopted versus what's not. And so I would say ideally in 5 years, presuming it is well adopted, we're in that space where the underwriters are out in the market, 75% of their day and working towards understanding their customers. But I'm always a little bit reserved in terms of expectations because, as you said, things tend to move in this industry a little bit slower than I think we would all like.
We're all doing our best to sort that out. Look, I'm going to move straight on with no questions, I'm afraid. I've moderated this terribly badly. And I'm going to, I know I've also had a preview of what's coming next. So I'm going to hand you over now to Lisa, who's going to talk about rational, revolutionary enterprise AI. In the meantime, the three of you, thank you very much. That was fascinating.